Hello everyone, I'm Steve Savant, syndicated financial columnist and money color commentator. On today's show, budgeting and banking, part 1 in our series on National Financial Literacy Awareness Month. We're talking about celebrating National Financial Literacy Month. And all this month, that's all I'm talking about in a lot of my tweets and blogs, because I've never understood how we can be the most powerful economic nation in the world and of all mankind and be so illiterate about basics of money. I don't remember being taught anything of the basic concepts of budgeting and banking, some of the most rudimentary thinking. I don't even remember anything in my grade school, junior high, high school, or college that even talked about this. So when we're meeting with clients, most people are not educated, and what I want to do is always come to the place of being a very good financial educator and have services that actually lend to that so that people have a good understanding of what they're doing. I have a budget. I've been on a budget for a long time. I'm surprised that many of my baby boomers, my brethren, right, have not been on a budget. So if you say, Steve, I have never really seen a budget in my life and I really need to get on it, just write me at steve@lifesizesolutions.com and I'll send you the budget that we use all the time. It's excellent, easy to understand, and it'll really help you start to manage your money and to get to a place where you become successful, especially cash flow at the end of the month. But you're probably going to need a bank. Now, even though we're using virtual banking now, and some people still say, no, I got to have a brick and mortar down the road, whichever banking you choose from, you can do this now. You don't have to go into the bank. I can make deposits on my iPhone. I can go and look at my statements off my iPhone. I don't have to go into the bank. I don't have to wait till the end of the month for a statement. I can do all this now. I can do banking almost concurrently with every day and what we do with our balance sheet and our checking account and making sure that it's true inside the bank. We're letting the bank help us monitor our checking account. So when I'm looking at this, I'm always doing basic ideas, basic banking. The banks offer accounts that could be checking accounts, it could be savings accounts, places to put your money. I have a checking account. I use the checking account only to pay bills. Some of my bills go direct and are taken right out of my account, and I can see that. Some of them I have to actually schedule other times. Some of them are quarterly, some of them are semi-annually. So I can't always put all my bills online and pay it that way. So I have accounts that are checking, and I only fund the checking with what I need to fund it with. Some banks will give you a little bit more interest if you're willing to put $15,000 in your checking account. But I say, I don't want to tie up that kind of money just to pay bills. So our first issue is, what kind of accounts do I need, and how do I use them skillfully as a good steward of your finance? So checking account, I want to pay my bills out of that. There's really pretty much nothing else I'm doing with that. I'm going to have a basic savings account that funds my checking account that I can use. It has partitioned in my thinking, my current bills and my emergency fund for any insurance that has any kind of deductible. So I might have a house problem. I'm going to have my insurance pay for it, but I still have a deductible. I have a problem with my auto. I was in an accident. I'm going to have money in there to pay the deductible. If I have a long-term care contract and it has a deductible, I'm going to have a deductible. If I have it for health insurance, I'm going to have a deductible. Whatever I have, I already have this on my side account. So I have the money for bills going to be paid, and I'm also going to have all these different deductibles already set aside inside that small savings account that's attached to this account, and I'm going to start doing that. And by the way, if you're working, you should probably try your best to park about 90 days worth of cash in case you lost your job. So the most important, not only are your insurance deductibles and having money for emergencies, things that just come up in life, but you also want to be able to have about 90 days out in actual income. So if you lose your job or you were sick for a long time, you have money to go ahead and pay your bills. That should be in your accounts. And the only loan that I think is worth having, and it's the only one, and I don't mean to be too pedantic about this, but the only loan I think about is mortgage. I think a mortgage is probably, most Americans can't buy their house with a straight up cash deal. So you may want to start looking at a good mortgage. And I would be shopping this. Your specific bank may not be the best deal. It may not be the best interest rate, the best settlement costs. You just want to look and do a little bit of play there. And then credit. My bank may indeed offer me a credit card, and they all do, by the way. And I went out and shopped mine. I like to use certain credit cards because they give me cash back. I never let my credit card go beyond the 30-day cycle. I always pay pay it off. So I'm getting money paid to me, and almost always in my 40 plus years of being married and being a father and a grandfather, I always have enough money for holidays, for birthdays, all based on my credit card, which pays me certain numbers, certain amount of percentage back to me as long as I pay my card off every month. So I might have a couple grand at the end of the year that I earned just for using my card and then paying it off. And I use my card for almost everything I can. It's got a good record keeper. Now here's the thing. If you have a budget and you're using almost your cards for spending so that you can see what you're spending, you can make your statements now become part of your monitoring process of your budget. Having a little idea of when you're thinking about national financial literacy, you want to have financial literacy in this area because it's everyday principles. If you can't balance your checkbook, we're in trouble. And if you can't remember, all the numbers, all the math, we don't need geometry, we don't need trigonometry, we don't need calculus, we don't need physics. We need basic addition, subtraction, multiplication, and division. That's all we need. And so 90% of Americans, if you can do that, you should be able to balance your budget, balance your checkbook, and also have a statement at the end of the year. At the end of the year, I take a total composite of everything I've spent. It actually breaks it down into categories. I can see where I need to pull back or where I'm spending too much. I can adjust it because it's a really good monitoring system. It gives me good personal surveillance of my money. Also remember, some banks, not all, but some banks are also into savings accounts where you could have a certificate of deposit. You could have a checking account that's tied to that. If you have enough money, maybe that's when you use it. And also investing. Some people are already licensed under the SEC and FINRA to be able to talk to you about mutual funds, to be able to talk to you about indexing, maybe even REITs, depending upon your propensity for risk. So they have mutual funds, CDs, IRAs, and money markets. Banks are very good about the first level here. Savings, checking, accounts, loans for your mortgage, and maybe your credit card. But I think I found many places I can go. I say shop it. You can't believe that by the time you get into your 60s, you're going to be sitting there looking at fees that are going to be, you paid somewhere between 40, maybe 45,000 in fees for your entire life to play in every one of these arenas. So it's really sharp to really go out and shop your accounts in the bank, figure out what bank's going to play best with you. You may find that it's better and more benevolent to be in virtual banking, but not all people can deal with that. Remember, there's a little bit of psychology here. It's difficult sometimes to sit there and say, my bank is a virtual bank. I don't know where it is. It's out of town. It's all online. So if you don't have that comfortability, you're going to have to think of some bank in your local community that you can go down, you can see, you can get to know the teller, you can get to know the bank manager. That's probably good for you. So when we're looking at that, and remember, when we're looking for credit and we're going to check out different banks, you want to be able to check out not only banks, but maybe even credit unions. Remember, there are some basic differences between banks and credit unions. If you pay the annual fee, which is generally pretty cheap for a credit union, you may find that their interest bearing is a little bit higher than the traditional bank. If you want to shop these rates, you want to shop the institutions and figure out what's best for your family. It may be basic account, or maybe a interest bearing, or a credit union option as an option, or just regular banking. You want to be able to check all this out and understand which one bank is going to support you the best. And I say if they're going to hold your money, find out what services are going to really curtail to you and customize for you and your family. There's no reason to go ahead and stay in the same bank if it's not going to give you a really good opportunity to serve you and to make money for you. And that brings me to my savings. When you're saving, you have to have money in your emergency account. So I don't have that in a CD, I have that in a basic account. So I can get to it immediately without a penalty. And I use it for my regular support of my bill paying. But when I get past that, then I'm gonna look at the savings. What kind of CD rates do they have right now? As I've gotten older, I've looked at the difference on what's going on bankrate.com, which right now is probably the best 5-year CD out there. It's probably about $235 at the time that I'm recording. But the best annuity 5-year lock is probably around 3.5. So sometimes there's a big disparity. And with Fed ticking up the rates as they have been, and look like in the rest of 2018, we're going to see a couple more rate hikes, you're going to start to see CDs return to some kind of suitability, but you're also going to see annuities punch up a little bit, and especially different types of savings accounts. So hopefully, as the government raises rates, you're out of debt and you can use their savings routes, their savings accounts, to be able to apply to your family's budget and your family's finance. Understanding your budget and banking together with credit cards, you can really start to put yourself in a place where you have financial stability. Don't forget to watch our next segment on Getting Carded, part 2 in our series on National Financial Literacy Awareness Month. And keep in mind, before moving forward with any of the ideas on our show, always check with your tax consultant, legal counsel, or financial advisor. You've been watching Steve Savant's Money, the name of the game.